Okay, so what's the difference between a bookkeeper and a CPA?
The big difference is the bookkeeper is the person that basically counts everything for you. They make sure that every dollar is accounted for. They make sure that it's, nothing's going in, nothing's going out. And then they give those reports to the CPA at the end of the year or quarterly, and the CPA will analyze it and say, hey, like, I think you can move money here. I think you can do this. This is what you'd owe in taxes. So you're analyzing the reports that your bookkeeper makes.
I'm going to hire someone to do my taxes. What red flags should I look out for?
Yes, the number one red flag that I would say that would make you say no to somebody or to watch out for is if you see an accountant that says, I can guarantee you a big refund or just a refund in general. Because one, that's not true. You don't know, right? You don't know how much they make. You can't guarantee they're going to get any money back. Also, two, another big red flag is if they say, hey, I only charge you money if I get you a refund. Me as a CPA, at least in the state of Iowa, I know California is the same. I would assume that all states are similar. I actually cannot charge you a contingency fee based on what I get you back because now I'm incentivized to be risky, to do something illegal, to advise you wrong. So if somebody is guaranteeing a refund or saying you only pay me if you get a refund, those are red flags because it's impossible to tell somebody they can't pay taxes.
Why do you think so many people don't know about taxes?
So the reason why I think a lot of people don't know is that it's not taught in school. And another reason is if you're an employee, you can't take advantage of any tax laws or tax loopholes or tax deductions. When you're employed, you make money, you pay taxes, it is what it is. And in the school system, right, it was designed to make employees. That's the reason why there's bells. So you move between different factory parts. And I can go way deep on that, but I think the biggest thing is not taught in school. Nobody has any clue. When I get new clients and I say, hey, you're getting a refund, they have no idea where that refund's coming. They just think money falls out of the sky and I got money back because I'm a good person. No, it's because you overpaid your taxes. There's no like crazy loophole. So I think that's why it's not taught in schools and it's just not, most parents don't even talk about it, I think, because they don't know. And it's just this big cloud of mystery that nobody knows about.
Do you think a lot of people overpay in taxes?
100%. I would bet, well, no, not only from what I've seen, but I think Forbes says it every year. The average business owner overpays, I think, by like $10,000 every single year. Now, obviously, there are some that don't. There are some that overpay a lot. But I would say just from the people that come into us every single day, they're missing at least $20,000 in tax deductions. I would almost bet my license on that. That for most people, if you're married and own a business, I can find $20,000 of expenses you're not taking.
Let's say I'm hiring you to do my taxes. I'm all about like making stuff easy for other people if I'm having them do stuff for me. What can I do to make that process easy as possible and to where we're prepared, you're not waiting on stuff for us?
To look like really prepared and be the people that we want to work with, one is that you're coachable, meaning that whatever we're going to tell you, you're going to implement or at least listen to. Because the number one thing we get from people is like, well, I saw this thing on TikTok. I saw this. Can I do this? And it's like, hang on. One, I don't even know if we can help you. And you're already bringing up these imaginary scenarios that most likely don't apply to you. So one is that you're coachable. Two, the other thing is actually a very small thing. You have a business bank account that has all of your business transactions. So what do I mean by that? It means like you're not spending money and like paying your mortgage out of your business, paying your mortgage from your personal account. And really, if you have a separate bank account that's only business and separate credit card that's only business, and you're coachable, we're gonna get along just fine. It's the people that don't do what we say and basically try to like be their own tax accountant and then just come to me to like verify what they think they saw. So that's what I say, coachable and have a separate bank account, and we can definitely help you.
What should I have prepared when I'm coming in to get my taxes done by you?
The number one thing we always ask you is give me a copy of your last tax return. The reason why that's so important is because that way we know where you are. It's kind of like a map, right? If you said to me, hey, come pick me up, where are you? I don't know. I'm not just going to drive in circles. So I want to see what you filed your taxes as last year, because at least I know where you started. The next thing, do you have a separate bank account that has all of your business transactions in there? And as long as you guys have those two things, we can definitely help you out and get you moving in the right direction.
Is there a certain revenue we should be bringing in before we like hire a CPA?
When you want to start hiring a CPA, is probably when you're bringing in, I would say over $50,000 in self-employment income. So that could be from your side hustle. That could be if you're selling shoes on the side. It could be if you have an accounting business or like a legal business. Once you're bringing in over $50,000, that's when we can kind of start to have fun and make more of these like fancy deductions you hear about, like the S corp and the retirement, is once you're making that amount of money, then it becomes fun. I would say if you're under that $50,000 mark in self-employed income, you could probably do it yourself for the most part.
So if I'm using Cash App, what's the deal with taxes and stuff like? Because I know they made something that if I made so much, we had to report it.
Yeah, so that's a great question. So there used to be that Cash App or Venmo, any of these peer-to-peer, if you made over $600, they were going to give you a 1099, and then you'd have to report it in your taxes. The IRS actually just repealed that within the last few weeks, so we're here, sitting here in December 2023. So they did repeal that. If you do have a business, I actually prefer that you guys steer away from those apps like Cash App, Venmo, Zelle, things like those, because those are inherently personal. The reason why most people use them is because they don't have fees, because they're meant to be personal. I'm actually going to give you an example. This happened to a client. He was a barber. He made like $100,000 in Venmo in his personal account. Venmo actually shut him down because they thought it looked, because most people don't have $100,000 like peer-to-peer stuff or like your friends giving you money, so they shut it down. So you want to have a business account like Square, Stripe, that is meant for you to bring in hundreds of thousands of dollars, and they're typically not going to freeze your account. Venmo has been known to freeze people's accounts, and now it sucks because so that happens. So I would say if you're in business, stay away from that and just move towards Square because you can set up automatic payments, you can store stuff. In Venmo, you can't store things; it becomes a hassle.
How early do I need to contact you if I'm going to have you do my taxes?
The best time to contact a CPA, me or anybody else going forward, it's actually not in April and May. It's actually not that time because it's too late. It's in June of the current year. So if you know you're making a bunch of money in 2023, you want to come in the middle of the year. Why do I say that? Because now we have time, one, to start saving for taxes, to start making certain moves to save you taxes, such as like putting your kids on payroll. A lot of people don't do that. Now in the middle of the year, you can put your kids on payroll. If you were to come to me now, December 14th, and say, hey, JT, can I pay my kids $20,000 on payroll? I'd say, no, it's too late. You can't do that. You have to be paying them throughout the year. So you want to be coming in as soon as possible. It's definitely not December when there's 15 days left.
What if we paid a few business expenses with our personal accounts or the other way around? Can we fix that or are we screwed?
If you have paid business expenses with your personal cards, you want to locate it as soon as possible. Like, you don't want to come in now and say, hey, in January I did all this. If that happens, it happens. I've swiped my business card for personal. Once you notice it, you just say, oh, you're going to move that money from your personal account back to your business, and then it basically wipes it out. So that's how you would do it. If you accidentally swipe the wrong card, just reimburse your business.
Can I write off utilities if I'm running a business out of my house?
You can write off your utilities, your rent, your mortgage, anything like that. The easiest way to do it is you want to have a space in your house that's exclusively for business. So that means the only time you're going in there to work. It's not like your couch where you watch Sunday Night Football. It's a separate space. The easiest one is to pick a spare bedroom, set it up, call it your office. You want to take the square footage of that home office that you have, divide it by the total square footage. You come up with a percentage. So let's say your home office is 100 feet. You have a 1,000 square foot house. That means 10% of all of your monthly expenses are deductible. So like 10% of your rent, 10% of your property taxes, and 10% of your utilities. Now, if you want a pro move, what I would suggest is actually picking a really big spot of the house to make it business, because then you can write off maybe like 30%. If you want to turn your living room into like a movie studio or to a big home office, you can now just make that 10% deduction 30%. So it's a pro tip. I told one of my clients, hey, your master bedroom, that's now your home office because it's a little bigger. And the husband loved it. He was like, oh my God, I could write off half my house, but damn right you can. You picked the right CPA.
What about our bathroom? We have a building on our property where we do stuff at. And what if someone comes inside, use the bathroom? Can we write off our bathroom?
So the way that you would be able to write off that bathroom in that situation, if you, let's say you have a separate, unit, like a guest house, we'll say, or a back unit, but they use the bathroom in the house, that bathroom would have to be exclusively only for business. So if you're commingling it, then it just doesn't get written off. So actually, I have a funny story. The client did this. They were going to build. The wife wanted a custom bathroom. She's like, "Oh, but you work from home." Husband says, "Hey, can we write this off?" And I said, "What I'm hearing you say is that you're building a new home office for your wife, and you're building a new home office bathroom that she's going to use during the day when she's working, and potentially because sometimes you get cold during the day or you get sweaty, she just might want to take a shower during her work day exclusively to use her custom bathroom. Is that what I'm hearing?" And he's like, "Yeah, that's what you're hearing." Well, then it sounds like you have a business bathroom that you can write off 100%. The question that people actually don't ask enough is it's not, is this deductible? It's how do we make this deductible? Because you can make any, like I said, you're like, hey, how do I make my living room deductible? It sounds like you have to film in the living room to make content for your video production slash social media business. If you were to hire a random kid to sit on your couch, you would pay them. So it sounds like you need to pay your daughter's tax deductible. That's what I'm hearing you say. So like I said, we took a situation that's not deductible, made it deductible. And that's actually the better question to be asking your CPA is how do we make this deductible? Because 9 times out of 10, there really is a way to make it deductible unless you're dealing drugs. In that case, then it's not deductible.
How do we make sure with all this stuff that we don't get screwed if we ever get audited?
So the way that you're going to make sure you don't get screwed in an audit is you're going to, let's take your daughters, for example, right? Like they're kind of helping us. They were picking stuff up, moving it, right? Let's say you wanted to pay them $3,000 a year. So what you're going to do is you're going to drop a contract from your LLC and you're going to hire and as employees. You're going to sign it as their mom and dad because they're minors. You're going to set up a separate bank account for them. You're going to move money from your business account to their personal account that you also control because you're their parents and they're minors. And if the IRS says, hey, like, you're paying these kids, what were you doing? Well, here's the transfer that we made. Here's the job description that we signed as their parents. Here's the money. Here's the contract. This is a regular employment contract. I paid them what's market rate. I didn't pay them $30 million. I just paid them a couple thousand to sit in for us. And then you have comparables because you have to have market rate. So the IRS loves market rate. If you can find in your place in Tennessee that child actors get paid $3,000 to do similar stuff that your kids are doing, the IRS would be like, oh, this is an ordinary necessary expense. Part of their business is to film themselves, to advertise, and you'd win every time because the IRS say, oh, you did it by the book.
So how does that work with like child labor laws?
So the IRS would defer to labor laws in that state. Most states have this, is that so child actors can work in entertainment or they can work in their parents' owned business. So Iowa, we're a farming state by history. When you were, in 1900, when you had kids, their job was to work on the farm like the second they could like walk, talk, and speak, right? Most states are pretty similar like that. So if your children are working in your business, the state will allow you to hire them. The reason is that the state's going to assume that you're probably not abusing your kids. So they're not going to really meddle in your business. So most states will allow you to hire your kids in a parent-owned business. It's when you start having them work in non-parent-owned businesses, right? Because you're not going to have a 5-year-old go like work at the grocery store. It's probably not going to happen. But they get work at mom and dad's corner store that's owned by them 100%. So that's how you would get around the labor laws.
We go to the gym a lot. Is that something we can write off?
So the gym is going to be a hard one to write off because it's an inherently personal expense. The only way that a business owner could really write off the gym is, like if you're in the fitness industry, like you're a personal trainer, you make gym supplements, you own a gym, things like that. But for you guys, where it would be, I see that you guys have a video production company. I would assume that you guys like to film yourselves in the gym to attract more potential fitness clients, correct? Have you ever done that? So what you can have your gym write up a contract, say, hey, I'm going to pay you guys a little bit extra or a little bit differently. Part of my agreement is going to include us allowing us to set up our equipment in the gym to film for promotional videos. And you're just paying the gym rent to use the place. That's how you would do it.
Why do you hate the word depreciation?
The reason why I hate it is when non-accounting people read it on the internet. And people say, well, I saw on TikTok that if I buy a G-Wagon this year, I get to write it off 100 or 80% or 100% this year. And I want to depreciate it fully. It's like, that's the reason why I hate it, because it's actually a very short-sighted strategy, because what most people realize, you can write it off in 1 year. When you turn around and sell it the next because you can't afford the payments, you have to pay even bigger tax. So you're just kind of delaying the inevitable. I like to tell people, hey, buy a car that you want, that you're going to use for a while. Because if you're just going to flip it the next year, you're going to end up paying more tax than what it's worth, and more than you expected.
Is there a benefit to leasing versus buying when it comes to vehicles?
The difference between buying and leasing it, it's more depreciation expense. But I always like to tell people, don't let the tax tail wag the dog. It's do what you were going to do financially. So like, let's say maybe instead of putting $100,000 down to buy a car, you might just want to lease it for like $1,500 a month, because you're going to use that $100,000 to maybe hire an employee, to maybe invest it in the stock market. So that's where I would say it'd be different. It depends on, one thing I would ask you is, what are your goals? Do you drive this car a lot? Do you like to change cars every 2 or 3 years? Because I would say if you're going to change cars every 2 or 3 years, just lease it. That way you don't have to worry about like trying to sell it. Just once it's done, you move on to the next one.
So I've heard that if you travel and you talk about business, you can write it off. Like, can we do that?
You have to be going with the business intent. So like when you guys came here, or when you guys have come here in the past to Des Moines, like you're coming to see us. Let's say you were to visit us in August this year for the state fair. You would come see us in the morning from like 8 to noon, something like that, film some stuff, and then we might go to the state fair. You just have to come with business intent, work for 4 hours, that entire day becomes deductible. So when you go to the fair at night, that's a completely deductible weekend. And then if you want a bonus one, what you should do is you should plan a trip, work on Friday, take Saturday, Sunday off, work Monday, come home that night. Your weekend just became deductible, and you don't have to work on the weekend. It's called wrapping your weekend. So like you guys have daughters that are homeschooled, right? You guys should go somewhere cool, like go somewhere to Miami, work on Friday, take Saturday, Sunday off, go up to Disney World or Disneyland out in Florida, finish working on Monday a little bit, fly home Tuesday. And now that weekend trip just became deductible.
So we can write off the money we spent at Disney.
So Disneyland in that example, you can't write off the tickets, but you can write off the food that you eat. You can write off all the coffee, and you can write off the hotel. So if you were to stay at maybe the Disney World Hotel, I'm sure there's hotels all on there, that becomes a completely deductible expense. It's just not the tickets. Now, the way you would write off Disney World, if I were you guys, and this is how you would do it, is what you guys would be doing is getting content for your production business. And you want to say, hey, look how cool Disney World is. You guys should come here as content creators and film here. That sounds like a promotion to me. And you needed to pay rent to get into Disney World.
Bro, you are bad,
And
bro.
and I know you're not the first, not the last to say that. And then here's the cool part: in the videos, right? Sounds like they're working. Sounds like they need to be paid. And I think their tickets now become deductible.
Bro.
I'm sick with it. I'm surgical. Like Alonzo said in training day, I'm surgical with this bitch.
Oh, yes. Man.
What should I look out for when it comes to like taxes and scams?
The IRS actually comes out with a list every year. It's not always 12, but it's generally around there, of the 12 biggest tax scams that you should be looking out for this year. Some of the ones that were on there this year are something like called captive insurance, which is, I don't want to go into that, but if you hear somebody saying captive insurance, run, because it's most likely it's kind of a scheme. Another one that they talk about is kind of like we were talking about earlier, saying I can guarantee you a refund. That's part of that. So the dirty dozen are basically tax scams out there that you want to look out for. It changes every year, but you want to be asking if your accountant, actually that's another red flag. If your accountant has never heard of the dirty dozen or the list itself, that means they don't know what they're doing. Not that they're going to be able to name all 12 things every year, but if they don't know if they've never heard that name of the list, run. One of the things you guys asked me about was like, why do we ask these questions of clients? Like, why do I have to provide my return? Why do I have to provide my information? Can't you just talk to me and answer my questions? And I would say this, the reason why you can't do that, or that I won't do that, I've done it in the past, is you want to think of me kind of like your mechanic, right? If you called a mechanic and you said, hey, I think my car's making this sound, what is it going to cost to fix it? The mechanic's going to say, well, he's going to ask you, like, what kind of car do you have? He's going to most likely ask you, can you bring it in so I can look under the hood? It's the same thing with your taxes, right? If you try to like describe to me what you have, it's probably not going to be right. I'm going to give you wrong advice, and now we've just wasted both of our times. I would rather you just say, hey, here's your car, look under the hood, tell me what I need to do. When I see a prior year return, I'm pretty good at picking out about $20,000 of expenses that you haven't taken, and that way I can see under the hood, right? So that's why I would say always let me look under the hood as a mechanic, because I could tell you exactly what's wrong with the car rather than you trying to describe it to me.
Do you guys give any kind of help or teach courses on how to prep our taxes?
We didn't in the past, but we are going to start offering help to where you guys can kind of learn the secrets that we have. We're going to have a webinar coming up in the next few weeks, but we're going to teach you all the secrets of how to prepare your taxes, what documents you need, and most importantly, how you can actually save tons of money doing your taxes without changing anything. A lot of us love to get big rewards for not changing our habits. So make sure you be on the lookout in the next few weeks. And we're going to be showing you guys exactly how to save more money doing the exact same thing you did last year, just better.